Nerida, if I begin with you, where do you think house prices will bottom out, nationally speaking, that is, and where do you think the bulk of the selling will be coming from?
Yeah, look, it is interesting looking at what's happened. The absolute worst month was June last year. We saw prices drop by about 2% in both Sydney and Melbourne. Since that time, the rate of decline has started to slow. So it does look like they will probably bottom out in the first quarter of this year. But, you know, they have come back a lot. So if you have a look in Sydney now, prices have dropped by about 10%, Melbourne 9%. But then if you have a look at somewhere like Adelaide, prices have only dropped by about 2%. So it does look like it's nearly over, but some markets have obviously been hit a lot harder than others.
Nikki, where do you see some of that supply coming from, if indeed you think it's going to be coming? Will it be more of those stressed sales from people, you know, with perhaps negative equity, perhaps investors, or those who'll be rolling off their fixed home loans onto the variables?
Yeah, look, I think the interest rate situation is going to create problems for some, and the Reserve Bank modelling suggests it's a relatively small portion, less than 4% of borrowers. But there's still that 4% or so who are faced with, they don't have savings buffers in their mortgages, they haven't had good wage rises to keep up, they're going to be hit with a big shock of interest rate rises all in one, particularly for those on fixed loans. And so there will be some, if they've bought in the last year or two, and you've had that big downturn that Nerida just referred to, well, you're between a rock and a hard place. So while they're a small part of the market, I mean, I think, the market will stay soft. We know when interest rates go up, house prices go down. And if you remember at the start of this cycle, people were talking about 15 to even 30% drops. So if we end up with a 10, even 15%, that'll be, something that we can cope with. We go in cycles, they go down, but unfortunately, they just keep going up and up and up, and they recoup. So while some people might do very, very tough over the short term, over the longer term, most people will be better off.
OK, well, Nerida, we know that a lot of this boils down to rates, as Nikki was just touching on there. What are you predicting with rate hikes from the RBA? I mean, consensus seems to be that there'll be one or two to go, but we did see that forecast from Deutsche Bank this week looking at 4 more interest rates and taking that cash rate above 4%.
Yeah, look, I mean, a lot of it comes down to inflation, which certainly looks like it's peaked. If we have a look at US inflation, it is behaving pretty similarly. That peaked in June at 9.1%. It's sitting at about 6.5%. We have hit a record, or a 30-year high in December. But a lot of the drivers that are pushing up inflation are starting to ease off. So fuel prices are generally coming backwards. Construction costs look like they've peaked. And also supply chain blockages really seem to have been sorted. So I think at this point almost certainly we'll see one next week. We'll see an additional rate rise next week, probably another one in the first quarter. And then from that point, I think ideally we will start to see them stabilise. Hopefully, we don't head into recession. I think that's probably the one thing we are starting to see elsewhere around the world, where monetary policy has been very, very rapid and very hard, particularly New Zealand, that country may head into recession because they move so quickly. So Reserve Bank are being pretty careful, but obviously with good reason.
Nikki, do you share those views?
Look, I think we'll get one more, because I think the RBA wants to send a message that even though they think inflation has peaked, that we shouldn't be complacent. And they're still watching and eyeballing very closely what's happening with wages. And that's probably more of a key. Nerida's right, and all those other things that have abated. But we need to make sure that with a tight labour market still going for a little while yet, that we don't see wages pick up and sort of upset the apple cart on inflation. So I think we'll see one more. But it's actually quite hard to argue for more than that. When you think about what's happening with consumer confidence, business actual activity, the retail sales that we had softer, house prices continuing to fall, the signs are all there. I think the Deutsche Bank forecast is basically saying the RBA is happy to tank the economy, and I don't think they are at all.
Just briefly, Nerida, do you think, given that you think that we're about to see the bottom in the next quarter, will there be bargains still to be had? Because whilst prices might be falling, we're speaking here about rates being higher than usual, potentially a couple more rate rises to come, which reduces people's purchasing power.
Yeah, look, absolutely, people's purchasing power has been reduced. But in terms of bargains, we know that prices have come back, but the challenge at the moment is that there isn't much stock out there. When we have a look at the number of properties for sale over the past quarter, they are 25% lower than what we saw in the same quarter last year. So there's not many properties for sale. The other issue too is that property markets are more complicated than interest rates. And when you have a look at some of the drivers of what pushes up pricing, things like population growth is definitely back. We are seeing international migration start up again. We do have a housing supply shortage. Construction costs are at record levels, so that's really restricting the amount of supplies. And then we have general economic conditions. I mean, if you go across to WA at the moment, one of the strongest rental growth markets in Australia, still seeing population growth, and we're not really seeing much of an impact of interest rate rises in that state. So, it is we do tend to look at Sydney. I think that does get the lion's share of attention because it is such a volatile market. It is very expensive and people do tend to speculate. But in the rest of Australia, a lot of the drivers are really quite different.
One of the other things I think just to add in there is that banks are less willing to lend as well. They've got tighter restrictions, particularly for investors. They're really pulling in the reins. So there is that slight dampening on the demand side, notwithstanding, of course, particularly rapid population growth if those potential immigration numbers are going to come true.
Now, Nikki, Nerida touched on rents there. We also know that they're tracking at record highs. Affordability is dropping. We're hearing horror stories of people lining up and not getting the place that they want to rent. I mean, what are the factors that are driving this?
Look, this is the same story we have heard year in and year out for a very long time now. We just don't get it right on the supply side. And there are a lot of things that cause that. But there are any number of economists who for 20, 30 or more years will have been saying what we should have been doing. And it's about having the political will at local, state and federal level to do the right thing. Obviously, the federal government wants to build, they say 1 million new homes with some affordable and social housing in that. I mean, probably the cycle would have delivered most of that. But they are doing a little bit more for that social and affordable, and that's the area of the market we really need to tackle, because the hardest hit people are those on low incomes, particularly people who need Commonwealth rent assistance, which just isn't sufficient. We see those reports out that say that 1% of people can, or there's one property that anybody can afford to rent, and so that's particularly an area. But we know what to do. We know about zoning laws, we know about supply, we know about incentives to provide build to rent schemes. We just need to get off and do it, and we need to have the economics analysis there to say the reasons we do this is because it makes our cities more productive, it adds to economic growth, it's better for social inclusion, and the list goes on.
And I mean, we could unpack some of those state policies. I know New South Wales has scenarios of 150-odd thousand new homes over the next 5 years. Whether or not that is going to contribute greatly is probably for another discussion, and a long discussion at that, because Nerida, I just wanted to ask you about inner city rents. I mean, they're tipped to increase by around 5% with the return of Chinese students, particularly in Melbourne and Sydney. How much is that and the return of migration going to compound the problem of rents?
Yeah, look, it is a big issue. We have seen Melbourne CBD rents, for example, increase by $90 a week over the past 12 months, and that's without the introduction of all those additional students coming back. So definitely inner city areas, apartments in particular with students, but we are continuing to see a lot of problems in regional areas, particularly beachside regional areas. So many of those places have seen stronger population than they've ever recorded, and also at the same time we did see a lot of holiday home purchases during the pandemic, a lot of homes being converted empty when people weren't there, or alternatively to short-term accommodation. So, there's a lot of challenges in the rental market, and population growth isn't helping, because low levels of supply isn't helping. And there's two things that'll probably help it, and that is that there'll be lower levels of household formation. We are probably going to see younger people stay at home longer, people sharing more often. Those sorts of things will likely increase. And the other one is just around affordability, that at some point rental growth does start to slow, because people just can't afford to live in certain cities or in certain locations.
Not to mention perhaps the demand expectations that have changed post-COVID. But ladies, we are out of time. Thank you so much for your time on The Business, Nikki Hutley and Nerida Conisbee.
Thanks
for having me.